Welcome to this interactive study guide on setting business aims and objectives. Every business, from a local startup to a multinational corporation, needs a clear direction. Aims and objectives provide that direction, guiding decisions on marketing, finance, and operations. In this video, we'll explore the difference between broad aims and smart objectives, examine the main types of objectives, and see how factors like business size and life cycle stage influence them. By the end, you'll be able to apply these concepts to any case study. Let's map out the key concepts. At the top, we have the business aim, a broad statement of direction, like to become the market leader. Beneath it are smart objectives, specific, measurable steps that help achieve the aim. For example, increase market share by 5% within 12 months. Remember, objectives must be smart to be effective. This hierarchy is crucial for exam answers. Turning to our core notes, there are 7 main objectives you need to know. Survival is critical for new businesses or during economic downturns. Profit maximization is the main goal for most private companies, calculated as total revenue minus total costs. Market share objectives aim to outperform rivals. And don't forget social enterprises, which prioritize social goals over profit. Each objective fits different business contexts. Now let's see how objectives are actually set. 3 key factors influence them: business size, sector, and life cycle stage. A small startup might prioritize survival, while a large PLC aims for profit maximization or market share. The sector matters too. Private firms seek profit, public sector organizations focus on service, and third sector groups like charities have social objectives. Finally, a business in the growth stage will have different goals than one in decline. Let's work through a typical 6-mark question. To score full marks, first state that a startup's main objective is survival because it faces high failure rates and cash flow issues. Then contrast with a multinational, which has resources to pursue profit maximization and market share. Finally, explain how life cycle stage and resource availability drive these differences. Always apply to the specific business in the question. Watch out for common mistakes. Many students confuse aims and objectives. Remember, aims are general direction, objectives are specific targets. Always check that your objectives are smart. Another pitfall is writing generic answers. Always tailor your response to the business in the case study. For example, a small bakery's objective might be to increase weekly sales by 10%, not just increase sales. Be precise. To wrap up, remember the difference between aims and objectives. Know the 7 main objectives and when each is appropriate. Consider how business size, sector, and life cycle stage shape objectives. Finally, in exams, always apply your knowledge to the specific business given. Mastering this topic will give you a strong foundation for all other business studies. Good luck with your revision.